Price action is like a special way of trading in the stock market. It's not just a simple strategy, but a whole philosophy about how the market works. Traders use some advanced techniques to predict what will happen in the market, and these techniques are pretty accurate. They look at things like support and resistance, swing highs and lows, zigzag lines, and pullbacks. It might sound confusing for beginners, but don't worry. In this video, I'll show you 3 indicators that make it easier to understand and use price action for making more money in your trading. These tools work in all types of markets, like stocks, Forex, or cryptocurrencies. Let's get started. In the third place, search for the swing high and low support and resistance by Pattern Smart. This indicator helps us spot important points on a chart called swing highs and lows. Traders use these points to find potential areas of support and resistance, which are crucial for setting up stop-loss and profit target orders. When the indicator fails to make a new swing high while the security's price reaches a new high, it's called a divergence, which may signal a trend reversal. So, we'll use this indicator as a price action tool to spot strong breakouts. But to make it even better, we need to adjust the indicator's settings. Simply double-click on the indicator and change the swing high strength to 49. And do the same for the swing low length. This way, we'll only consider trades during strong breakouts. For a bullish breakout, the candlestick must cross and close above the red resistance line. And for a bearish breakout, the candlestick must cross and close below the blue support line. However, keep in mind that false breakouts can happen, and that's where the momentum-based zigzag indicator by Peter O comes into play. It's a fantastic tool for detecting strong zigzag lines. When a red line appears, it signals strong bearish momentum, and a green line shows strong bullish momentum. For a short position, here's what we'll do. First, confirm a valid breakout by seeing the candlestick cross and close below the most recent support level. Then, check the momentum, as the momentum line drawn at the end of the breakout move should be a red line on the chart. And finally, wait for a retest before entering the trade. We want to see a weak bullish line colored in ash during the retest. If a green line appears, we avoid the trade. When all conditions are met, we'll sell at the close of the trigger candlestick, place a stop loss at the recent swing high, and set our take profit level at any point we prefer.